Welcome back to the channel. Today, we are diving deep into a company that's right in the sweet spot of a super resilient real estate sector. We're talking about Centurion Corporation, the global landlord for thousands of students and workers. They just dropped their results for the first half of 2025. And at first glance, you might be a little confused. The main headline says, net profit is down 35%. And you might be thinking, oof, that's bad. But wait, you have to stick around for the plot twist, because once you look just one layer deeper, the story completely changes. Their core business, the actual day-to-day operations, saw profits jump a massive 22%. So what's the real story here? Is this a hidden gem that the market is overlooking? Or are there some risks we need to know about? We're going to break it all down. The numbers, the different business units, what the CEO is saying, and most importantly, what it all means for you. Let's get into it. But first, before we get into the good stuff, just a quick disclaimer. This video is for informational purposes only, and it is definitely not financial advice. You should always do your own research and maybe chat with a professional before making any investment decisions. Okay? Let's do this. So, who exactly is Centurion Corporation? Think of them as a specialized global landlord. They operate under two main brands. You've got Westlight Accommodation, which provides dormitories for workers, and you've got Dwell Student Living, which, you guessed it, is for students. And they are big. We're talking over 70,000 beds, 37 properties scattered across 6 different countries, including places like Singapore, the UK, and Australia. Now, what makes them so interesting is the type of real estate they're in. This isn't your typical office or retail space. The demand for student and worker housing is driven by huge long-term trends. More students are studying abroad, workers are moving for jobs, and everyone needs a safe, well-managed place to live. This makes their business what we call counter-cyclical. It basically means they tend to do pretty well, even when the rest of the economy is, having a moment. And in today's market, that's a very attractive quality. All right, let's talk numbers for the first half of 2025. First up, revenue. And it's a good number. Centurion pulled in $140.7 million. That's a solid 13% increase from last year. A great start. Their gross profit also climbed 15%, which is fantastic to see. But then you see the official net profit. It came in at $83 million. And this is where you might scratch your head, because that's a 35% drop from the same time last year. Now, a 35% drop sounds alarming, but this is a perfect example of why you have to look under the hood. This drop wasn't because of bad business performance. It was almost entirely due to a non-cash accounting thing called fair value gains. You see, real estate companies have to guess how much their properties are worth every so often. Last year, they booked a huge paper gain of $82 million. This year, the paper gain was just smaller, only about $19 million. So they didn't lose money, they just didn't have as big of a gain on paper. It's confusing, I know. This is why Centurion also gives us another number. They call it profit from core business operations, and this number strips out all those confusing paper gains. And that number tells the real story. Core business net profit jumped a massive 22%, hitting $65.4 million. See, a completely different picture. This is the number that shows the real health of the business. Operations are strong and they're growing fast. The board also declared an interim dividend of 2.0 Singapore cents per share, which is always nice to see. So where did this awesome core growth come from? The star of the show, no question, was the purpose-built worker accommodation business. Revenue here surged 15%. This was pretty much all driven by their Singapore properties, where they saw strong demand and were able to increase rental rates. Their newest building, Westlight UB, also ramped up to being completely full, which really helped. Now, the student housing business also grew, but a little more slowly. Revenue was up 4%. The UK market did well with an 8% jump, But this was balanced by a slight dip in Australia, mostly because the Australian dollar was a bit weaker. So while the student side is the steady hand, it's the worker accommodation business that's really hitting home runs right now. So did they meet expectations? The short answer is yep, and then some. Analysts were already feeling pretty optimistic about Centurion this year, and this report confirms why. The 13% revenue growth and that 22% jump in core profit are right in line with what the bulls were hoping for. They delivered. So what's the view from the top? The CEO, Mr. Kang Shi-min, had this to say. He said, "We are pleased to deliver strong first half 2025 results driven by our resilient portfolio." He went on to say that even though Malaysia and Australia had some temporary slowdowns, the overall performance was robust, thanks to strong demand in Singapore and the UK. He's basically saying, look, we know there are a couple of small bumps in the road, but our main engines are running hot, and we feel great about the rest of the year. It's confident and it's direct. Love to see it. Okay, what's next? This is where it gets really exciting. They have a ton of growth projects in the pipeline. In Singapore, they're redeveloping 2 of their biggest dormitories to add thousands of new modern beds. In Australia, they're launching a whole new premium student brand called Ipes. But the real headline for the future, the big one, is the proposed listing of the Centurion Accommodation Real Estate Investment Trust, or CAREIT. Let's be honest, this is a game changer. The plan is to take a bunch of their stable, income-producing properties and spin them off into their own publicly traded company, a REIT. Why does this matter so much? Well, 3 reasons. 1, it unlocks value. It allows the market to see these assets for what they are, stable, dividend-paying machines. 2, it's like a cash injection. The listing will raise a lot of money that Centurion can then use to build even more new properties. It's a brilliant way to fund growth. And 3, and this is the one you'll probably love, they are considering giving some of the shares in this new REIT directly to current Centurion shareholders as a special dividend, a direct return of value, right into your pocket. This is a huge potential catalyst. So, how did the market take all this news? Well, the stock has been on a pretty good run this year, and analysts are definitely bullish. Before these results, their average price target was around $1.82. Given these strong core numbers and the exciting REIT means, I think that positive sentiment is here to stay. Okay, let's wrap this all up. What does it all mean for you? First, the good stuff, the bull case. The core business is crushing it. That 22% profit growth is the number you want to focus on. They are in a defensive business. Demand for what they offer is strong no matter what the economy is doing. The CAREIT listing. This is a massive catalyst that could unlock a ton of value and even result in a special dividend. The growth pipeline is packed. They have a clear plan to keep growing for years to come. Now, on the flip side, what are the risks? What do we need to keep an eye on? Occupancy issues. They mentioned some slowdowns in Malaysia and Australia. They seem temporary, but it's something to watch. Interest rates. Like any real estate company, they have debt. Higher rates could mean higher costs, so that's a factor. And 3, execution. The REIT listing and all their new projects are exciting, but they have to pull them off without a hitch. Overall, the story here is really compelling. The headline profit drop is misleading. The real story is about a strong, growing, resilient business with a huge catalyst just around the corner. So that's the scoop on Centurion's latest earnings, a fantastic example of why you always have to look beyond the headlines. What do you think? Is this a hidden gem? Is the CAREIT listing the game changer it seems to be? Drop your thoughts in the comments below. I'd love to hear what you think, and I try to read every single one. If you got some value out of this breakdown, it would mean the world to me if you hit that like button and subscribe for more deep dives. Thank you so much for watching, and I'll see you in the next one.